Ladies and gentlemen, good day and welcome to the Engineers India Limited Q4 FY23 earnings conference call hosted by DAM Capital. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference call is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital. Thank you and over to you, ma'am.
Yeah, good evening everyone and welcome to the Q4 FY23 earnings call of Engineers India Limited. We have the management today being represented by Mr. Sanjay Jindal, Director Finance, Mr. Suvendu Pari, Company Secretary and Investor Relations, Mr. R.P. Batra, Executive Director, Finance and Accounts and Investor Relations, Mr. Sunil Saxena, Executive Director, Technical and Investor Relations, Mr. Amanpreet Singh Chopra, General Manager, CMD Office and IR, Mr. Vivek Mida, General Manager, Marketing Business Development and IR, Ms. Neha Nerula, Senior Manager, Company Secretariat and IR. I'll now hand over the call to Mr. Jindal for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
And good evening everybody and a warm welcome to all. Recently we have declared our annual results for the financial year 22-23 and the informations are with respect to standalone results are as with respect to financial performance for the year ended 31st March 2023 on standalone basis. The company has registered turnover of 3284 crore in comparison to 2870 crore in the last year ended 31st March 2022, which is the highest in the last 10 years. With respect to last year, there is increase of around 14.5% in turnover of financial year 22-23 in comparison to financial year 21-22. The turnover from the consultancy and engineering segment stood at rupees 1418 crore and from turnkey segment was 1866 crore. Total turnover is 3284 crore. In the fourth quarter, the company has achieved a turnover of rupees 866 crore in comparison to 831 crore in the quarter ended 31st December 2022, showing an increase of around 4% on quarter-on-quarter basis, with turnover from consultancy and engineering segment amounting to rupees 371 crore and 495 crore in the turnkey segment. However, our margins are up by several folds, that is 3.3 times. There is increase of 230%. During the fourth quarter ended 31st March 2023, the company earned a profit of rupees 159 crore in comparison to 48 crore earned in the previous quarter ended 31st December 2022. During the year ended 31st March 2023, the company earned a profit after tax of 342.15 crore in comparison to similar profit of rupees 344 crore in the last year. The company is having a healthy earning per share of rupees 6.09. On consolidated basis, the company earned a profit of rupees 346 crore for the year ended 31st March 2023 in comparison to 140 crore earned during the last financial year 21-22. Therefore, there is increase of 147% in the consolidated profit on year-on-year basis. Overall, in the RFCL project, this unit is operating at the full capacity and excellent energy numbers, and we are expecting more and more profit in the coming time. And some of the other highlights are as follows. Our cash flows are very positive and leanness is visible on trade receivables. ER trade receivables reduced considerably during the year 22-23. Our debtors stood at 353 crore during the year as compared to 371 crore. The debtors as number of days of turnover has declined to 39 days during the financial year 22-23 from 47 days during the financial year 21-22, which is the lowest in the last 10 years. During the year, the company earned total dividend of 62.39 crore as against 41.78 crore during the financial year 21-22. And in the current financial year, we have earned dividend of 55 crore from the NRL investment. And in the as on date, we have the order book status. In the current year, order inflow in EL increased significantly to rupees 4,708 crore in the financial year 22-23 as compared to order inflow of 1,687 crore in the last financial year. Recently, the company has received the following major foreign jobs order: $22.14 million for supervision of Guyana integrated NGL plant in the Guyana, South America. EPCM job of $39.04 million for the Greenfield 400 TPD urea and 2300 TPD ammonia complex in Nigeria. The above order inflows definitely increases the EL international footprints as part of vision of the company for the geographical diversification. This is the highlight of the annual financial period. Bhumika, now I hand over to you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by 1 on your touchtone phone now. We take a first question from the line of Venkatesh Subramanian from Logic Tree Investment Advisors. Please go ahead.
Yes, sir. Good afternoon. Congratulations on a good performance. And I mean, recently reading up quite a bit of media releases, and EIL is on path to further growth in the next few years. So 2 questions, sir. One is, I understand oil and gas continues to be a primary source of revenue for the company, and you're also planning to increase your order book in the Middle East further. But I'm more interested, while that goes on at a particular growth rate, if you can indicate some sort of growth in top line over the next 5 years from the oil and gas segment. And number 2, from the new areas that you've been pointing out, which is in terms of renewables or nuclear power or anything else where Engineers India is now foraying into, what is the kind of vision that you have over a 5-year period that we can look forward to from the company?
Good morning, good afternoon. This is Vivek from EIL. Regarding this growth, you're correct that our core area and core focus would be oil and gas, because there the business lies right now and it's going to be there. Specifically, we see there's a lot of growth in the petrochemical sectors. All the refineries are going towards the petrochemical. Many crude to chemical complexes are being planned, and we are involved in various studies. So we see a lot of perspective out there. And definitely these projects are going to be there in next 4 to 5 years, because they are right now in the book, like in the conceptual stage. So when these gets realized, it will be actually next 2 to 3 years, 4 years, because you must have seen that we have a few opportunities that have been published in the information is being given in the media also with regard to the IOCL's Paradip refinery petrochemical complex, IOCL's petrochemical complex, which is 61,000 crores. As well as the BRL is also going for the refinery expansion and petrochemical complex. So in similar ways, all the companies are moving towards it. So that's naturally a very lucrative sector for all of us, and it's a core for us, so we'll be targeting that. With regard to the other sectors, we have already moved into the other sectors like the green hydrogen, bioethanol, green hydrogen, biofuels, coal gasification, and then fertilizer is also growing. We are going into that. And then non-ferrous metallurgy is also going. We are also entering into defense nowadays. So these are the sectors we have targeted now, and we are working towards it. Like sectors like green hydrogen or green ammonia or the green areas. These are the new sectors. Coal gasification are the new areas. So most of the activities happening right now is in the conceptual stage. Means like studies are being conducted, and we see that it is going to increase. It is when the project viability is established. The project will be established. So we see that opportunity out there.
So this is the perspective we are looking at it. Going with the international is the another area now we are going to focus. We must have seen that this year international has given a very good contribution in our business. So we have also changed our strategy and we have started focusing on the international market. So we are strengthening our Middle East office, which is located in Abu Dhabi. So that is going to take care of the Middle East market business, as well as we strengthening more manpower, more projects have been targeted. We have also gone into, you must have seen that this time we have gone into the South America and secured one of the assignments. So we are also targeting nearby countries wherein we can have more business opportunities of similar types. Then another area which is coming up which is very productive for all of us, and it's a new area, is the Africa. Africa, we are already there, and we have the substantial experience of working in Nigeria, wherein we are, we are constructing a refinery. So using that experience, we have been able to secure a project for the fertilizer. And now we are very pleased to tell you that we have received another order from the same client for the train 2 in this year, which will be reflected in this year's business. We have already signed this order recently in last week. So we are also thinking of having some petrochemical complex. We are talking to some clients with respect to the petrochemical complex in Nigeria, as well as we are focusing towards the other African countries, wherein there are prospects of like LNG are there, or fertilizer is there, or oil and gas is there. So we are targeting those countries also. So that's how we are shifting our focus from purely being the domestic company to overseas company. So that's one of the areas. And right. Another focus has been given from the core sectors to infrastructure. You must see that in the recent results also, our core infrastructure contribution in our business is increasing nowadays. We have been doing various projects earlier. We have done various institutional building works, our data center projects. Now recently we have got this year we have secured one assignment in EPC basis in the infrastructure segment also. So we are also focusing on the infrastructure part of it.
Perfect. Okay, great. So I think it's probably too early to talk about numbers, but is it fair to assume that we have enough opportunities to probably grow at 15-20% top line over the next 3 to 5 years?
Exactly. So talking about the numbers is difficult because we have to target a lot of projects. Many of the projects are in the anvil. But saying that this number would be there, we cannot say that with surety. But definitely we have a target in mind. We'll be securing that much business at least in this financial year. So to maintain our business what we have secured this year. So we'll be at least trying to reach to that level and try to improve over the results, and all the efforts have been on. So you must have seen in the progress in EIL's business and the visibility of EIL. You must have seen that. So that will continue to happen.
Sure. I appreciate that, sir. I will join the queue, sir. I'll come back to you. Thank you so much.
Thank you. To ask question, participants may press *1. We take the next question from the line of Ashwini Sharma from ICICI Securities. Please go ahead.
Thanks for the call. Can you hear me?
No, sir, we cannot hear you very well. Please use the handset and speak a little close to your mic, sir.
Yeah. Is it better now?
Yes, a little better. Please go ahead.
Yeah. So my first question is on the clarification. The change order that you had received during March from HRRL, is it totally implemented, or still it has got some things included in the current backlog?
No, it is yet to be implemented. It is undergo.
Just to be. Okay.
This work we are doing already, and this is change order by way of increase in scope of work. And that is to be executed in the coming time.
All right. So my second question is on the LOI that we have received, 1,600 crore. What is the breakup of that in terms of consultancy and the turnkey projects?
In what, sir?
Sorry, I could not get you. Your voice is not clear.
I'm sorry, sir. I'm saying that the 1,600 crore of LOI orders that we have received, which you had mentioned in the press release, what is the breakup of the
go-ahead orders?
I'll just come back.
Okay.
Thank you. We take a next question from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. First question is a clarification. So if I see the Q3 end, our order book was around 7,865 crore. This quarter we received in new fresh orders of 3,900 crore. And if I remove the execution of 865 crore, the order book should have been 10,900 crore. But it is reported around 7,695 crore. So there is a difference of 3,200 crore. So is it related to just this change order?
Yeah, this is basically related to the change order which we have received and accepted during the current quarter. That is already reflected in our order book as of 31st December 22.
Okay, that was already there in 31st December 20.
Order book.
So this 3,200 difference, how, I mean, where it has gone?
This is basically from the two major projects we are executing for the turnkey segment.
So that 3,200 crore is yet to be executed, right?
Some part of it is being executed and other part will be executed over a period of time.
So how much is unexecuted?
Basically, these projects are spread over a period of 3 to 3.5 years. So revenue is recognized over a period of time. Some of it is being executed and balance will be executed over a period of time.
Okay, so this change order basically is not entirely reflected in this 7,695 crore order book.
No, that is totally reflected in 7,695. I told you that as of 31st December 22, we have taken that into consideration while calculating the order book status. But that was not coming in the order inflow.
Okay. Now, secondly, can you just help me to understand this 78 crore write back in the other expenses?
Yeah, basically, you are aware that we are executing some major projects and we are creating provisions for contractual obligation in our financial books. When the job is over, in case no liability comes, so whatever provision we have created over a period of time, that is being written back. So we have a settlement for one of the major orders in this quarter, and the write back is on account of that particular order, majorly on account of that particular order.
Okay. And that is also part of both the segmental profit, like consultancy and turnkey.
That is a part of the consultancy segment profit.
Consultancy segment profit. Okay. So assuming that every year we have some change order, the annualized basis, we can expect consultancy to post 27 to 30% range of margin and EPC at around 4%.
We target for that, but that depends on the basically completion of that particular project when the warranty guarantee is going to be right back. So that depends on the basically settlement of change order and completion of job. The margin may vary from quarter to quarter, but our aim is to maintain the range.
Okay. And you mentioned that the typical execution cycle is around 3.5 years. So that is for both the outstanding order book, current consultancy and turnkey?
Yeah, both basically. Major order in the consultancy and turnkey segment are between 3 to 3.5 years. Plus there are certain small orders also which are executed maybe within 1 year or 6 months also. But on an average you can say that our order book is being executed in a period of 3 years, 3 to 3.5 years.
Okay.
Generally, all the mega projects and mid-sized projects ranges from 3 to 4 years.
Okay. And lastly, on all the opportunities you have mentioned, the upcoming opportunities on the hydrocarbon side or even infra side or even ammonia side. So considering all this, do you expect that, the non-hydrocarbon business can be 30-40% of the overall EIL business over the next 3 to 5 years? Or still you feel that hydrocarbon will remain dominant?
Actually, hydrocarbon will always lead because they are mega projects and their values are high. So they are at least next 5 years they are going to lead. probably in times to come when all these green initiatives and all gets more frequent and projects are implemented. Right now, most of the things are on the paper. When these projects are implemented, right now many of the projects have been implemented under the government pressure. So they have to establish the commercialization of it, and gradually when the projects becomes more viable, then definitely our segment will also increase. In fact, we are also changing, we are moving towards it. This year in the energy transition segment, we have almost secured business worth 10% of the overall business. So that percentage has increased drastically, which never used to be there in the earlier segment, in the last year.
Okay. And moreover, EL is known for their technical capabilities. So we are targeting high-end engineering projects. And as on date, high-end engineering projects are oil and gas sector. And that's why we are having 27% segment profit in the consultancy job. And in the infrastructure job, you cannot think of the even double-digit figure. So, in the interest of bottom line, definitely we are targeting oil and gas sector at this time.
Okay. That's it from my side. Thanks.
Thank you. A reminder to participants, if you wish to ask a question, please press star and 1 on your touchtone phone now. We take a next question from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Hello, sir. Thanks for the opportunity and congratulations on good set of numbers.
Afternoon, Charanjit ji.
Yeah, so my first question is, in terms of the order inflow outlook, if you can, give a guidance in terms of what is our expectation for this financial year, and which could be the large projects, in the petrochemical side or the refinery side, which would be targeting. That's my first question, sir.
First is that we will try to match what we have secured this year. We will try to improve upon that. It won't be right to give the figure right now, but this is just a start of it, and at least we are going to meet that, and we are going to improve on that. And with respect to the petchem and other projects, you must be aware that we have talked about the BORL, which is going for the refinery expansion as well as the petchem. So that's definitely on the card. Then we have part of the expansion project which is going to come in future. Then many of the other refineries, like in private sector also, they are thinking of crude to chemicals. We are working with them. We are preparing a feasibility report for them. Then another private sector like HMEL, we are already involved in the earlier polymer project. They are also thinking of specialty chemicals, so we are also working for them. IOCL is also thinking of a few petrochemical facilities in Gujarat. In times to come, they will be floating a tender, so we will be also participating there. This would come in this financial year, largely in this financial year. So these prospects are definitely there.
And sir, from mix perspective, between turnkey and consultancy, what could be the mix we can expect in the order inflow?
It would be primarily the first is that traditionally we will be going for the LSTK only on the OBE mode, wherein we are more secured. So consultancy, PMC and EPCM would be leading. This year, the LSTK has led the show.
57.
It's already 57%. Naturally, we will try to maintain the same ratio next year also, because we are also focusing on the OB kind of projects from right now from the oil and gas sector, as well as in the other defense sectors also. We are trying to get into that kind of mode. So let's hope for the best. If we keep our fingers crossed, we should be able to get more into OB. And selective LSTK, definitely we will be targeting it. And we see that it could be approximately 50-50 in times to come.
So 50% consultancy and 50% turnkey, that is what we are expecting.
It could be there.
Okay. So, and another important...
Ideal choice, but
that depending on the business, definitely will not be refusing any business. So ideally we want to look like this.
Basically, our consultancy business depends upon the mega project in India. Because all the oil and gas, all the projects in oil and gas sector are driven by the government schemes and government approvals. So there are so many factors for the consultancy job.
Got it, sir. So if I may just, add another one question. So in terms of, the defense and some of the new segments, while you have touched upon, but if you can just also give some more color in terms of what is the, area which we are targeting in the defense. And you also touched upon coal gasification, where we have already seen a coal gasification policy and, Coal India looking to, get into that opportunity. So that's a totally new area. So these two segments, if you can highlight more, sir.
The defense, we will be working with we are trying to enter into the ordnance factories for modernization of their plants. We have some projects online and we are discussing with them. And so it would not be appropriate to tell the name at this point of time. And with regard to the gasification, we are working with the NLC, Navali Lignite Corporation. We have already done the phase 1 of their pre-project activities part. So we are likely to see their implementation of the second phase. Apart from that, we are also engaged with a few of the other private consultants who are right now in the feasibility stage itself, but we are working with them to see that whether that project sees and that's from the coal to chemical projects. We are working on that with few private sector clients. Those are mostly in the feasibility stages.
Got it, sir. Thanks a lot for taking my questions. I'll circle back in the queue. Thank you, sir.
Thank you. We take a next question from the line of Jonas Bota from Birla Mutual Fund. Please go ahead.
Thank you, sir. Just a question on the oil and gas sector. We were also targeting jobs in upstream. Any updates there? What seems to be happening there? There was a few jobs that we were expecting, projects we were expecting from the upstream sector. Second one was, a couple of years ago, and for quite some time now, we've stopped discussing the mega refinery. Now, of late, it's been in the news, but any update there in terms of possibility that this project goes through?
In the upstream sector in India, primarily we are engaged with the ONGC and we have agreement, and mostly we are focusing on the engineering consultancy assignments. And these projects are not in the exact exploration types. They are mostly linked with the processing of the crude oil. Okay, processing basically subsequent to when it is taken out, and then processing facilities are there, their pipeline facilities are there. So all those kind of projects we are involved in. So that is the focus on the oil and gas projects.
But is this something that is going to yield us significantly large projects in the next financial or the following years?
Not large projects. They are going to be consultancy. Some of them are going to be LSTK projects, which we have secured. The OBE projects which are coming under that are from that segment only, because we are taking up those projects on OBE basis. So in LSTK segment, those will be there. Apart from that, in consultancy also we are getting a lot of assignments under the same segment, from the same segment, and same kind of work, kind of revamp, modernization of the facilities and all. So we are targeting those projects. Apart from that, we are also there in the international marketing. We are working with ADNOC, wherein we are carrying out a lot of feed and engineering assignments with them in the upstream segment.
Got it. And any update on the mega refinery?
On the mega refinery, which is the RRTCL, is still on the cards, but you know that its location has been changed 3 times, so nobody can say when it is going to come. But still the work is on. We are engaged in the environmental services, consultancy services for that project. So we don't see that the hope is dying, but it's still there on the cards.
Understood. So you laid out...
Split, it is possible, yeah.
Got it. And you laid out certain projects that you're looking at, say BORL, etc., for this financial year. Are these all projects now open for competitive bidding, in the sense that these are competitively bid projects, or these are on nomination as of now?
Basically, all these projects goes on competition basis only. These days, most of the projects we secure are on competition. We have to face the competition, and we have been facing it.
Unless it's a change order, right?
Sorry? Unless it is a change order.
Okay. And if Batraji can help explain this entire change order thing, because it formed part of our backlog in Q3, and then in Q4 it's not. So if I just missed that part, if you can help me understand that.
Yeah, I told you basically in the order book that was reflected as of 31st December 22. In the inflow, we have shown that during the current quarter because that particular thing is accepted by EIL in the current quarter.
Okay, but this is something that will add to our revenue, or this has already been executed and we had just put up pending bills?
Some part of it has already been executed and balance is to be executed.
How much of it is unexecuted, sir?
Right now, I don't have any figure regarding how much is it executed, but maybe 50% is executed and 50% has to be executed. Maybe I'm basically giving the assumption. I don't have an exact figure right now.
Sure. And what is the provisions pending? So, as of 31st March, in the provision schedule that you have in the balance sheet, so to account of, how much, what is, at one point in time, it used to be about 400 CR. What is it currently?
Cumulative provision may be more than 500 crore.
Got it. Fine, sir. Thank you, sir. All the best.
Thank you. We take the next question from the line of Himanshu Upadhyay from O3 PMS. Please go ahead.
Yeah, hi. Good afternoon. I had a question on, we said about for growth, we want to diversify into various segments, okay? And some of them are urban infrastructure, ports and harbors and defense and biofuels. And see, what are the areas where we don't want to focus on? Means because we are seeing infrastructure growth happening across the board. What would be the metrics which you will be using to select which businesses you think can be really sizable, sustainable business and profitable business over a longer period of time? And hence, those would be the areas where primarily you will be focusing on.
Let's talk about it. Let's talk about the infrastructure part. Infrastructure part, if you see that we are primarily focused on the institutional buildings. We are not into general construction projects. We work as a project management consultant. We go into the institutional buildings. We go for the data centers or kind of airports. We work for. Then we have also been involved in the this bullet train project. In some of the cases, we were working as a construction supervision consultant for one of the stretch of that. So these kind of projects, niche projects are targeted. We don't compete with the consultants in those segments which are low value segments and where the competition is very high and we are not likely to get the business. Similarly, in the other segments like in the biofuels is going to be a new area. We are already executing one of the first refinery in India, which is a bamboo-based refinery. So this is a highly technology intensive. We have entered into an agreement with one of the licensors to get the technology and we are implementing. So this is adding niche to us. Similarly, in the hydrogen is going to be a new area. So we are getting into electrolyzers. We are setting up hydrogen plants in the refineries from the brown hydrogen to green hydrogen we are converting. We are working into the green ammonia segment wherein this green hydrogen is also going to work and this. So now if you see that renewable, we are not going into renewable because renewable in the basically solar and all these segments, there are a lot of players are already available who are very low cost players. So we do not find any value for us to be in that segment and we cannot compete with those people. So that is the kind of area we pick up wherein some technology intensity is there and we are capable of this. We can get certain assignments on negotiation basis. Like in infrastructure, we mostly get the projects on negotiation basis from various clients. So this way we segregate the work. And where there substantial engineering work is involved and we get the value and I can book more engineering man hours, that will be our focus for selecting any of the area.
Okay. And in terms of profitability, any views you want to have that below this type of margins is not conducive for us? Because even in some of these fields, we see some of the global players having very low margins. Okay. So what would be the threshold type of figures?
This is wherein we want to enter. If it's a niche area, it's a very specific area which is going to add value to us. then one can think about it. Otherwise, we will be very cautious while taking decisions. So every due diligence is done before bidding for any kind of project. We take a call on what basis we have to choose. So there is no generic written policy that what should we do and what should not do. It depends on the case-to-case basis.
Okay. Okay. Yeah, thank you from my side.
Thank you. We take the next question from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah. Good afternoon, sir. Thanks for the opportunity. So my question is, what is the order left from the EPCM service for Kaveri Basin and Panipat, and what kind of revenues have booked in these projects in last fiscal? And isn't the ordering for Kaveri Basin and Panipat is very slow? Do you expect it to pick up in FY24?
I think you have to check whether you're talking about Kaveri Basin or P25.
Both, yeah.
Yeah, we are recognizing the revenue as per the progress. So right now we don't have the figures. For P25, the work is being executed at a fast pace, and the revenue is being recognized. In the Kaveri Basin also, few things are being done, and accordingly the revenue is being recognized. Right now we don't have exactly the figure how much revenue we have recognized from.
No, so my question was, is the progress slow in these two projects? Because I don't see a lot of tender activities are very slow.
In the Kaveri Basin,
in the Kaveri Basin, there were certain political issues. Those will be resolved. I believe that we have seen certain articles, and also things are being realized, and I hope to come back on track in the course of time.
Okay. And so on the crude to chemicals business, which you talk about both the IOCL, the BPCL, do you think that these two contracts, the consultancy services contract, can be finalized in H1 FY24, or do you think it will take a longer time?
No, it is going to take. It will not be in the financial in the Q1. It will be coming towards the end of the financial year, or midway somewhere in the financial year. They might go for certain early services like the pre-project services, going for the licensor selection. Those kind of activities may start.
My last question on the coal gasification, I think I missed out. So are you expecting anything other from coal gasification apart from the NLC projects which you have? Do you think Coal India will award some of the orders and where we can have some large role to play?
In coal, with coal gasification, we are working with one of their subsidiary for Western Coalfield for a DPR for setting up coal to methanol project. And we have done the feasibility study, and it is in the process. Then it will be realized. Similar way, another study is also being carried out. So still in the cards, but the faster pace is Navili Lignite, wherein the pre-project activities are being done and tendering is being done.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, sir, and thank you for the opportunity. Sir, firstly, just correct me here. It is the 70 crore. Hello, sir, I'm audible, sir.
Yes.
Yes, sir. Sir, firstly, in the for the consultancy and the engineering project business, there is a write back of 70 crore in this quarter.
Other expenses.
Hello. Yes, sir.
Can you repeat your question? Your voice is...
Yes, sir. Am I audible now, sir? Am I clear now?
Yes, better.
Yes, sir. So I was just mentioning about that 70 crore figure. That 70 crore rupees is added back to the profits to the consultancy and engineering project segment?
Yes. Very right. Yes.
Okay. And sir, what is the total provision, cumulative provision you have mentioned about 500 crore? That is post-execution.
Yeah.
So going ahead, keeping the contingency aside, we can see write back of rupees 500 crore.
That will be written back over a period of time.
Over a period of time, yeah.
That will be written back over a period of time. When the project is being completed and no liability arises, at that point of time, that particular thing will be written back. In case some liability will come, that will be just from that particular provision. So that will be spread over a period of time, not in the next financial year, or that will be spread over a period of time, and that particular project will be completed.
So what was this write back figure for 31st March 22?
31st March 22. Right now, I don't have a figure.
Okay. Sir, if we look at our numbers in terms of about our yearly numbers, the PBT numbers have remained flat.
PBT and PAT are almost flat.
Are flat. It is, I think so. The fertilizer RSFL contribution that was negative last year, and we have been able to lower the losses. That has contributed to the profitability in the consolidation. That is what should be the. So, what is the likelihood from this Ramagunda fertilizer going ahead, sir? If you could give us some understanding on how the operations have been, and other than the Ramagundam, the other investment which we have made, I think so, for the refinery project, what have been the dividend amount that we have received, and what's the growth plan for these two investments, sir? How are they likely to accrue to the company going ahead, sir?
First of all, we have investment in Numaligarh Refinery Limited, and we have investment of around 700 crore in the Numaligarh Refinery, and as on date we have fair value of 766 crore itself. And in the current year we have received a dividend of 55 crore on the investment of 700 crore in the Numaligarh Refinery. Then we have subsidiary, 100% subsidiary, Certification Engineers India Limited, and we have received dividend of 7.7 crore from the CIL. And in addition to that, we have investment in Ramagundam Fertilizer and Chemicals. We have 26% stake. And as I have already told, in this year, at this moment, RFCL is operating at 100% capacity, and even sometime it is running even more than 100% capacity. And this is the first year where RFCL has made profit of 8 crore. Profit of 8 crore on the annual basis, since it was having losses in the up to third quarter, and in the fourth quarter plant was stabilized and it was running at the 100%, so it could make profit on overall basis, and we in the coming year we are expecting good profit from the RFCL investment also.
Sir, in the Ramagundam fertilizer, what is our investment for 26% stake?
491 crore.
And what is the fair value today, sir?
It is not listed.
Sir, for unlisted also we are not evaluating it as post the number, the book value.
No, it's not required as per the accounting.
Fair value is not required.
It's basically investment at cost, basically, in the JV. So no fair value is required to be made for that particular.
Correct. And sir, for the other income component, the other income includes the dividend part also. Out of the 164 crore that we have booked for FY23.
In the other income, we have received more dividend from the NRL, as well as we have received more interest on our fixed deposits also. So therefore, there is increase in the other income also.
Okay. And lastly, sir, what is the cash on the books as on 31st March?
Total cash and bank balance?
Yes, sir.
It is around 1100 crore.
Okay, and this is also the advances that we have received from for the contract awarded.
It includes advances also.
Includes advance.
Cash advance also. Yes.
So if you could segregate that amount, sir, what is our own fund, cash fund here, and advances?
Yeah, it's advances are around 100 crore, so it's around 952,000 crore of cash balance there.
Correct. Thank you, sir, and we hope that this year should be better in terms of top line, and also the contribution from the subsidies would be positive. So that should be the sum and substance going ahead.
Definitely.
Thank you. We take the next question from the line of Ashwini Sharma from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity again, and pardon me if it is if I'm repeating the question. So the first question is that the go-ahead letter, orders worth rupees 1,600. I just wanted the breakup of that number in terms of consultancy and the turnkey.
That all belong to the turnkey segment.
Primarily belongs to turnkey.
It's all gone into turnkey. Okay. So second question is on if I look at the order book of consultancy segment, it has been, flat at around 4,800 crore in the last 2 years, 23 and 22. How do you see this number improving going ahead, sir?
With respect to the order book in the consultancy segment, now you see that order book is going to, we are targeting that more and more consultancy assignments. We have gone into international markets. So we see that more and more projects are coming towards it, and definitely LSTK is going to be there. And LSTK, we are having this year we had almost 50% of the stake, and consultancy was also 50%. So this consultancy business we are going to increase as soon as, because we are targeting that around at least same kind of margin can be achieved from this. And with the addition of some of the old projects are going on in the project, so that's how the OBP is going to be flat. Now with the addition of the new projects which we have secured in the current year, you will see the implication of that on the order book in the next times to come. And we are working towards it, and let's hope for the best.
Okay. Sir, on guidance, if I, in the last few quarters, you had mentioned that there will be around 4,000 to 5,000 crore of order inflow in 23 and going ahead as well. Do you still hold that guidance?
Yes. We will try to maintain that.
Okay. And lastly, sir, on just a bookkeeping question on the Ramagundam, what was the sales and EBITDA number, sales EBITDA PBT number for Ramagundam in FY23?
Right now,
EBITDA का नहीं होगा, सेल मिल जाएगी. नहीं ना, सेल. 57 होगा ना ये तो.
96 किलो. It will be around 4,500 crore.
Total turnover.
Total turnover.
And EBITDA, sir?
EBITDA तो 8 करोड़ का ही है, 8 करोड़ में डेप्रिसिएशन ऐड करना है. हाँ, 8 करोड़ का पैट है, तो EBITDA तो भी बहुत ज़्यादा नहीं.
Right now, exact figure is
not available with us. So
no problem, sir. I'll take it offline, sir. No problem. Yeah, those were my questions, sir. Thank you. Thank you very much, and all the best.
Take it offline. No issue.
Thank you, sir. We take the next question from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah, good afternoon, sir. I have two questions. One, this new areas which we are talking of going into, will it be on the EPC side or the consultancy side more? Like, what would be the mix in those areas in the days to come?
Can you repeat the question, please? Just again.
New area आपके consultancy में या turnkey में?
Yeah. Hey, that is we put that all the new areas primarily will be going into consultancy only, because this being a new area, so we can't take much of a risk in that. So we have to be very sure about those segments, and thereafter in the course of time, we might go into the EPC later in the stages, not in the recent years, but later in the years.
So the fruits of this would take around, I guess, is it fair to say it will take around 3 to 4 years to materialize, like the numbers from this new areas to start coming in meaningful way should be at least 3 to 4 years away?
Should be.
Okay. And so my last question is, looking at the last numbers, is it fair to think that we can grow at double-digit top line and double-digit net profit margin? I mean, this margin should be maintained at least for next 2 years?
That is our wish. We are working towards it, but the competition at the same time is increasing. You should also appreciate that market conditions are changing. Earlier, we were the only ones, but there are a lot of people around. So we have to work hard and beat them and then get the job.
Okay.
Nothing is coming on the platter.
Okay. That's it from my side and all the best.
Yeah, thank you.
Thank you. We take the next question from the line of Dikshit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity again. So my question was regarding the growth. As you rightly mentioned that we will be targeting a double-digit growth, but you know, considering the order book of 7,600 crore with 3-year execution, and we are also targeting 4,000-5,000 crore order win. So I mean, even if we'll achieve double-digit, it will be low double-digit. Is it fair to assume?
What we have said is we will try to maintain this. We have not said it will go below this. We will try to improve upon this. At least this much we will try to secure, because it's a future and we cannot predict when. But we are working towards it that we have to increase our top scale, and we have to reach to double-digit growth. That is our aim. But for the time being, at least we will maintain this kind of tempo what we have created.
Okay. And okay, fine. That's it from my side.
Thank you. We take the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yes, sir. Just a continuation to the question, sir. So for this year, we are looking at a revenue growth of 20% of what we closed for FY23. And if we look at the bifurcation between consultancy and turnkey, how the growth would be distributed among the two verticals, sir?
We are not giving any number, but definitely we will try to improve whatever we have achieved during the current financial year. Definitely we are basically anticipating growth in both the segments, but exact figure right now we cannot.
Only the ballpark numbers. The business plan are done. Now we have the execution, so we know what the visibility is. So any ballpark number would help us understand, because we were flat year on year last year. So taking into account, yes, sir.
We can only say that we will try to improve whatever we have achieved during the current financial year.
Okay. And on the margin profile, sir, how will those numbers look like? Because on the turnkey project, the margins are lower. So if you could give us the bandwidth, the band for both these segments, that would be very helpful.
So far we are maintaining our segment profit in the engineering consultancy segment in the range of 27%, and definitely in the LSTK jobs we are able to achieve the rate of around 3%. So we are targeting these margins in the current year also.
Correct. Okay. So earlier, due to some because of some demutation in the value for I think so for the pension part, there were some extra provisions 2 years down earlier for employee cost. So are we done and dusted with all those factors, or how is that line item looked into, the employee benefit expenses?
Yeah, maximum provision is being made basically.
No further provisioning is required on that account.
Correct.
We have already made sufficient provision in the financial year 2021, and no further provision is required on that account.
Okay, but we are working on the same line in the same way as been earlier. When we will take the hit, the company is going to take the hit in case of any shortfall.
That is a legal provision.
That is legal provision.
Legal provision that we have to avoid. Everybody has to avoid in case there is a shortfall. That has to be compensated by the employer. That is the legal provision. You cannot avoid that particular thing.
But in some PSUs, sir, that has been taken off. I think so. Some Gujarat state PSUs have already gone up when it changed the policy. So that was the reason why I was.
No. It does not depend upon the state. It is the PF Act which states that in case there is any loss to the PF trust, the employer has to make good loss. So that's why we have make a provision, and this does not depend upon the central or state. It is applicable for all.
Correct. And what is our tax rate currently, sir? Have we moved to the new regime or?
Yeah, 25.168%.
Okay. And for the dividend distribution, sir, what is the policy we are adhering to, sir? 30% of the profitability?
We are paying more than that. Right now we have paid around 49% during the current financial year.
Correct. Okay, sir. Thank you, sir, and all the best.
Thank you. We take a next question from the line of Raj Rishi, an investor. Please go ahead.
Hi. How do you place yourself with respect to competition, both domestic and international? What's the edge which EIL has?
With respect to international, we are quite comfortable because technically we are strong. Our experience and four experience and that helps us out in qualifying there. And in the international market, it's primarily focused. Most of the international companies give focus on the quality of the services. Quality of the services, less on the price. As well as the price-wise, we are competitive in that market because we are from India and quality is also there, so we are comfortable there. In India, competition is increasing because a lot of people with rates, a lot of companies are hiring locals only, and we face competition from the companies who hire the people for short duration and fire them. But the quality of the people is not ensured, but it's there, competition is there in India. But still we are surviving and we are able to get the assignments and get the business, what we have seen.
So international business is presently how much? Around 14%, right, of the order book?
With respect to the consultancy, it is almost 50%.
50,
in the consultancy, if you talk about the business terms, business secure terms, it's almost 50% this time.
Okay. And how do you see the trend over the next 2 to 3 years in consultancy? What percentage can be international?
We will try to maintain the same kind of percentage because we have increased the focus on the international market and we have done a lot of changes within the organization itself. Like more focus has been put in on our Middle East office to take care of the business around that area, and more strengthening of the people in that office. Similarly, we are focusing on the South America. We have started focusing on Africa market apart from Nigeria, wherein we were working earlier. So those activities have started, and we are doing it. And the results we have got the results of that in this year. So we hope that more of this sort business can be secured from there.
And you think majorly it will be consultancy only, not the other one?
The international market will, right now will not be going for LSTK. It is going to be consultancy, purely consultancy.
Purely consultancy, okay. And in the government sector, are you facing competition more than earlier, even in the government sector, in domestic?
The government sector, yes. We are competing in the companies like IOCL. We are beating the private consultants and able to secure jobs. Competition is there because everywhere they are not tendering. It's been awarded. Works have been awarded on tendering basis.
Okay. And okay. And what's your capital allocation strategy? If you can elaborate. Like,
what is it?
What is your capital?
Basically, we have to abide the DP guideline. So dividend is 30% of PAT or 5% of net worth, whichever is higher. Plus there are basically provision for the buyback and bonus and splitting of shares. That we are following up basically. As per DP guideline, we are following the capital allocation policy.
That's the minimum criteria, right? You can go.
Yeah, we are seeing more than that basically. As per DP guideline, 30% of PAT is to be distributed. We are distributed around 49%.
Yeah, but sir, in EIL's case, you don't need cash to capital to grow, right? Because it's service.
We need cash also basically. We are having certain investments also. So for that, we need the cash also.
You think you'll be going in for more investments like refinery and fertilizer, which you have done earlier?
Material investment is envisaged right now, but we are having.
I didn't get you. Can you just repeat it?
No material investment is envisaged as of now.
Okay.
Yeah.
Okay. Thanks a lot.
Thank you. We take a next question from the line of Milind Karmakar from Dalal & Broacha. Please go ahead.
Hi. Just wanted to sort of reaffirm that turnkey and consultancy, roughly you have 50-50%, right? Am I right on that in terms of the projects in hand or the order book?
Yes, you're audible, and it's almost 50% as of now.
Okay. And if I say that there is a looking at the current, we have 27% margin in consultancy and 3% margin in turnkey. Then effectively on a steady state, our margin should be, segment profit should be around 15%, right? If both are 50%, then it should translate into a 15% combined margin. Am I right on that?
Yeah, it's around 15% during the current financial year.
No, overall, if I consider the order book at 15%,
that depends on the revenue recognition basically.
My turnover.
Fair enough. But assuming that in next, so if we have a 3-year period or a 4-year period, overall, if I add back all the profits and add back all the add the top line, then the result should be at around 15%. Am I right on that?
You are right in case the basically the segment remains at 50-50. You are right, very right. But the segment will not remain 50-50 now. It will change basically. Revenue recognition change depending on the progress of that particular project.
No,
that is our wish list basically. That 50%.
Basically, boss, you are saying that our segment profit is 27%, and in case our LSTK segment profit is 3%, and you are averaging it 15%, but
over a 4 years,
some line does not follow as such, because segment profit is different from the PBT or PAT. After segment profit, we have certain unallocated expenses also,
correct,
which are to be deducted to come at profit after tax.
No, fair enough.
It cannot be straight 15%.
Yeah.
I'm not talking of the PAT. I'm talking of the segmental results.
Boss, it is 27% is right. 27% is on the EPA consultancy figure, and 3% or 2.5% on the LSTK figure. It is right. And in the current year, we have 57% turnover from the LSTK and 43% from the consultancy job.
Correct. So my second question was that if I look at turnkey projects, most of the private companies typically have margins which are slightly higher than this. So what are we doing to improve our efficiency in the turnkey projects?
Yeah, in our case, these are basically not the LSTK project. These are the projects. So basically evenly distributed between the client and consultant and the contractor. So as such, there is no risk for the increase in the plant and machinery cost. So that's why the margins are low. In case of the LSTK, it can be reverse case also. In case plant and machinery cost is passed on to you, the margin can be negative also. In this case, we are getting the positive contribution always because our risk is basically limited. So that's why we are doing these type of jobs.
Okay, got it. And my last question was on, besides the cash and bank balance, are there any investments which are not investments for business which we have, like investments in mutual funds or these type of investments do we have in addition to cash and bank balance?
Yeah, we are having a temporary investment for 15 days or 1 month basically to meet our immediate working capital requirement. That vary between 50 to 100 crore.
Okay, thank you very much.
Liquid mutual fund.
Okay.
Thank you, sir. Ladies and gentlemen, we have reached the end of the question and answer session. And now I'd like to hand the conference back over to Ms. Bhumika Nair from DAM Capital for closing comments. Over to you, ma'am.
Yeah. Thank you everyone for being on the call, and thanks to the management for giving us an opportunity to host the call, sir, and answering all the queries quite well. Really appreciate it and wishing you all the very best, sir.
Thank you, Bhumika. Thank you very much. Thank you all. Thank you.
Thank you, members of the management. Thank you. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference call. Thank you for joining with us. You may now disconnect your line.
Bye.
Thank you, sir.